Today we have David Rolls with us. Over a career of more than 20 years, David has moved from corporate and investment banking through an MBA at MIT to running lending partnerships at Amazon, and he now leads product at Storfund. There is a certain symmetry to that move. You spent time inside Amazon's lending world, and now you're at a company built to close that payout gap that marketplaces like Amazon create. Welcome to the podcast, David.
Thank you.
To kick things off, take us into your world for a minute. How do you describe what you actually do?
Well, thank you. Yeah, I've been working at Storefund for nearly 5 years now and leading their product function for most of that time. So my day to day is very oriented around the customer experience, but also sort of reaching across all aspects of the business. So I spend a lot of time with our commercial teams thinking about what our users need across the many geographies we cover, I think 33 countries and up. But also getting my hands dirty on the technical side of the house as well. So developing close relationships with our engineering function too. So it's it's an exciting world. And Storefund, we have about 50 people or so. So it's also a company that you can sort of wrap your arms around, if that makes sense, where we sort of know everybody and things can get done at a much faster pace when needed.
The first question that comes to my mind is for people who don't understand e-commerce or the operations of e-commerce or the payment side of things, how do you describe the problem that Storefront fixes?
Yeah, interesting, because our existing sort of customer base is already aware of that friction. So it's interesting to put yourself into the perspective. The way I would describe it is pretty straightforward. We work with a lot of e-commerce platforms like Amazon and in your example, but many others as well. And if you are selling a product on a platform like Amazon, it won't surprise you that when you sell something, you don't necessarily get paid immediately. In fact, all of these platforms have rules about when they will pay out a transaction or a sale that occurred today. And in most cases, we see it actually takes somewhere between 10 to 35 days or longer for you to receive all of the proceeds from a sale that's occurring on that platform today. So what Storefund does is to insert itself into that flow and provide liquidity while you're waiting to get paid out by the platform. So we basically read all of your sales data. On the next business day, we will add up all of the net sales activity for the prior day, and with a portion of that, usually 80%, straight into your bank account. And those payments take place every single day based on your prior day's sales activity. And then we also plug into the payment side of the platform as well. So when they do pay out, we receive those funds. We repay the advances that we've already made, so that 80% deducts our fee, and then the remainder gets paid out to the seller as well. So we're really a daily advance service that is navigating the ability to have liquidity within your business, so you're not beholden to the platform's payout schedules.
Interesting. You mentioned the advance 80% of the net sales day after the shipment. Take me into the thinking behind that particular number.
Yeah, that's a good point. So we do look at, first of all, the net sales activity. So you might have, say, I don't know, £1,000 worth of sales activity, but then there are some commissions, refunds, chargebacks being applied on that particular day. So maybe the actual net figure is more like £800 or £900, for example. We already take into account any of those negative events. But as with any sales activity, there can be additional fees being applied or chargebacks. So if somebody buys a product, you ship it, they receive it, we advance against it, but then they decide they don't like that product, they're going to turn it to the platform. And usually the platform has an obligation to repay that customer, which is part of the reason why they delay the payouts in the first place. So we need to have some sort of buffer or protection against those types of activities, mainly refunds, chargebacks, which is why we don't advance 100% of your sales activity, but a number which is usually 80%.
Understood. So how would you describe the difference to a revenue-based financing option, like in the way that how the risk is underwritten by Storefund compared to, let's say, Wayflyer or
Yeah, so there's quite a few products out there that may sound similar. I think the key difference with Storefund is that we are basing our advances purely on your existing sales activity. So everything we're advancing against are sales that have already occurred. There's no guessing, there's no credit risk, in fact. All of the activity that's taking place with us is happening based on actual sales. But also that means that you're receiving advances every single day. Most of the other solutions out there, not to name any names, but merchant cash advance, term loan, line of credit products, which other people might have tried before, are usually a lump sum amount or smaller amounts of money, but certainly not being advanced on a daily basis. So with our product, there's no pressure to spend the advances that you're receiving, right? Usually it's being used for restocking and expanding the business, especially during busy periods. When having a term loan amount, first of all, you've got to do something with that money. There's kind of pressure to generate a return on that as soon as you receive it. And then maybe you discover it wasn't enough, right? So you have to consider whether you need some additional financing. So we find our solution is very attractive to a wide range of customers that don't want to deal with the credit side of traditional lending.
If I can just jump in there. Hi,
sure.
David. Apologies for my tardiness. So,
All good?
can you help us understand what is the customer landscape for you? What is the ideal customer profile, and how does that kind of vary, maybe from a region perspective or from a platform perspective?
Yes, it's a really good question. And I'd say that we're still learning. Anybody that claims to have found, their perfect personas, I would question a little bit. So very early on in Storefund's existence, even before I joined, it was very much focused on the customer experience. We wanted to have sellers who were serious, usually not sort of hobbyists. We don't bank sole traders either, for example. It has to be a sort of corporate or small business entity behind it. And we wanted to give them something like a white glove service. We actually speak to our customers. Often we're the first to see, in fact, activities that's going on. Marketplace reviews and things like that, we may pick up even before our customers in some cases. So in the early days of Storefund, we're very focused on that experience. That's really true anywhere in the world. Most of our activity is still in Europe and North America and focused on a few countries in particular. But as I mentioned in the intro, we've tested this in many other countries too, where we have users or customers that are based. Right now, I'd say that there is quite a wide range in what the ideal customer looks like because we see our product being attractive to small businesses. And in fact, we only require an annual sales activity of about £100,000 or so to be eligible for our service. And then we have customers that are in the sort of 10 to 50 million pounds annual revenue category as well. So we have one product which works the same across that customer base, but their requirements are a little bit different, right? That white glove element of being able to get hold of a human pretty much any time of day or night is still super important for those larger customers. Whereas for smaller customers, being able to receive their funds as quickly as possible when they activate the service, have the optionality to turn our products on and off is more of a importance for them. And again, that's pretty consistent geographically as well.
Got it. And with these customers, do you kind of find that in terms of customizing your product offering, is that something that would be attractive to them? So you talked about that experience offering is a bit different, but in terms of that daily advance product that you have, does that apply very generically to all of those customers, or would you say that there is some customization that you do across these various target segments?
It's quite a generic product that is used consistently across all the geos that we have. And in fact, one of my early projects within Storfund was to really harmonize how our product works, both in terms of the customer user experience, but also behind the scenes. We had different pricing models, for example, that we experimented with. We had different uh, funding models running behind the scenes, deciding the advances that we were making to customers. Do we introduce caps and limits and things of that nature? And we wanted to keep it as simple as possible in order to grow as as predictably as possible. So behind the scenes, the product is identical. There is customization in terms of the user experience, though. So many of our big leaps forward in terms of the revenue that we generate have come through partnerships. So TikTok Shop was a big partnership we launched in the US and then last year within the UK, for example. And that experience is happening predominantly within the TikTok Shop environment. So we don't actually need customers to come to Storefund's environment to come into our application. I keep having to remind our team sometimes that our application isn't the product, right? Receiving cash into your bank account every single day that you're selling is the product that Storefund offers, and our ability to get discovered and to make that onboarding to the product, and in some cases offboarding, as seamless as possible is really where most of our focus has been.
Interesting. Okay. And so that onboarding, like you talk about having these partnerships, is that still something that you will actively focus on in terms of non-partnership related onboarding, of getting your customers directly onboarded to your platform, or is the focus solely partnerships now?
It's a combination. So we have a range of partnerships, we have a range of inbound sales activity, and we also have an outbound sales strategy as well. So it's really a combination. What I would like to ensure is that the user experience is substantially similar, right? Whether somebody stumbles across our products through our website or even a recording like this, whether they're being proactively marketed to by Storefund or one of our affiliated partners, or if they're coming through a partnership, the feeling that you have using the product, so the soft side of the user experience should be consistent.
That makes sense.
You mentioned, I want to touch a little bit about the challenges as well. Like you mentioned TikTok Shop in the US, the first fully embedded cash flow product inside TikTok Shop. How do you handle the sheer speed of live stream selling where a seller can clear their entire stock in and out?
Yes. So, I mean, first of all, it's a great use case for our products. And then you enter into the funny realm of people, yeah, as you say, sort of selling out super quickly, right? They might live stream on a Friday evening and they want to be restocked by Saturday for the next live stream that's coming up. And typically we can meet that requirement, right? That's exactly how our product works. We don't fund multiple times per day. So that is something that is relatively new, right, around the live stream world particularly. But when I mentioned that we're constantly learning, we're also learning across the different categories that platforms offer as well. So the profile of a seller who's selling furniture, for example, is going to look quite different to somebody selling collectible items like baseball cards and things like that. Furniture is, much larger individual sales that are occurring with much more of a lag in terms of the delay in getting an item shipped and delivered. Whereas collectibles can be in person or at least mailed, the same day with lots and lots of small transactions as well. Our models don't really differentiate between those types of users or customers behind the scenes. But of course, we have to be very sort of aware of the customer experience from the buy side. So if we're funding, 1,000 baseball card transactions that sum up to $10,000, or one item of furniture that costs $10,000, those do represent slightly different risks, right? I'm much more concerned that that piece of furniture is actually real and being shipped than if, a few fake baseball cards slip through the net, right? Not suggesting that does happen, but there is a sort of slight difference in the way that we as a risk function would think about those customers.
Interesting. And when we talk about the payout delay holding period, and it's a no surprise for everyone within the industry that is a real pain point for a lot of sellers on these online marketplaces. But do you think marketplaces like Amazon or even TikTok or various others, eBay, they will eventually be pushed to release funds faster? Or will third-party liquidity always be part of the picture as you grow and as you have more impact across this industry?
I think it will only continue to grow. There are some platforms that buck the trend. You mentioned eBay. They actually pay out funds, I think, the following business day, or at least several times per week to their sellers. So they're very, very seller oriented and very transparently. Our product just doesn't have much of a fit there. That's quite unusual in the platform space. And I wonder how they're able to do it when you consider the risks of chargebacks and refunds that I was mentioning before. Well, so more commonly, what we've seen is that time to get paid out increasing with platforms. And we've been speaking about e-commerce up to now, and that is the bread and butter, if you like, of what Storefund's doing. But now that we've reached the size where we're speaking with many other types of partners across different verticals, it's incredible to see where this liquidity is getting stuck in the system across pretty much anything you look at, whether it's hospitality, transportation, inside any payment companies. What Stripe's doing, for example, is super interesting. And so we keep finding these use cases across many different verticals as well. So we've certainly not exhausted our activity in the e-commerce space, but as I said, we're seeing big opportunities, maybe even bigger opportunities across many other verticals as well. So I'd like, in a weird way, it would be great if this problem didn't exist, right? From a user experience perspective, but from Storefund's perspective, I just don't see this problem disappearing. All of the evidence we have is pointing out that it's becoming a bigger problem, not smaller.
And another question around risks and challenges, the return fraud, they're falling under the regulatory implications that a firm like Storefund, I would assume, would be complying with. Last few decades, there's a lot of regulatory pressure on payment firms, financial institutions. How does that regulatory posture look like for Storefund? And does that bring a lot of challenge when it comes to dealing with fraud or returns or even money laundering cases?
Yeah, I think those are quite separate but related issues. So we are very sensitive to fraud, and without disclosing too much, we certainly made our share of mistakes when we were a lot smaller in terms of even though we only do business with companies that have at least 6 months track record, usually it's more commonly 12 months or more. Sometimes they're tempted to do naughty things, and we did have a few relatively small cases earlier on in our history where we learned about that sort of activity, people marking items as ships, but they're actually still in their warehouse, for example. And even one or two cases I read about where people are shipping bricks, right, just to juice their numbers. So those bad actors, I think, will always exist. It's a bit of a shame, but it's something that we've taken steps to protect ourselves against. So, for example, we actually check that items have been shipped and received by a courier before we advance against those sales, at least the vast majority that we can check. On the regulatory side, I think that's a bit of a more complicated question. So there's regulations that are at the country level affecting the platforms themselves. And as I said, that's one of the reasons why I think this liquidity delay exists. To protect the end consumer or to protect the platform themselves. and sellers in the e-commerce world, for example, are pushed to the bottom of the priority pile. We ourselves, the product that we offer is not a regulated product. Sometimes you hear it referred to as receivables financing, sometimes factoring, depending where you are in the world. It's that product. It's not subject to direct regulation because it's not a lending or credit product. But, that landscape could, of course, change. And I think that's where it's been a real benefit for us to be able to expand quickly, to test our products in many, many different parts of the world. So we can always expand in friendly jurisdictions. But yes, I mean, I certainly wouldn't rule out that something new could come along and completely shift the landscape in one particular country or jurisdiction. So we keep an eye on those things. I'm sure our customers do. I'm sure the platforms that we partner with do as well. And I guess the final point there is that, of course, we do think about KYB and conduct thorough checks on our sellers and other customers as well.
I think one of the things that you talked about, and I think it's a good segue into the next theme, which is talking about emerging technology and how that could potentially be disrupting or actually even improving a lot of the things in the fintech and in the e-commerce world. Can you tell us a little bit about how AI would have helped or hindered Storefund?
Yes, I will. And I think before we get into AI, because we touched on sort of the embedded nature of our products, that sort of externalization, if you like, of our service has been super helpful in the partnerships that we've looked to put together. And I'd say that that's in environment experience or embedded experience has just become the norm now for consumers with products like buy now, pay later. And generally speaking, for sort of small and medium business customers. That's why I mentioned Stripe as a particularly interesting player in a different world. I managed lending products externally within Amazon for a while. Then Shopify came along and kind of tore up the rulebook there. So there are companies doing super interesting things in terms of accelerating the embeddedness, let's say, of products. As you would expect, though, that doesn't sort of work for everybody, right? For smaller businesses, that's very useful. Whereas for larger companies, I think they care a lot less about the ease of being able to apply for a product as to whether the terms and conditions of the product make sense. Am I dealing with a human making a decision or a machine? And so to segue into that AI discussion, I think that the knowing your personas becomes much, much more important when you start trying to automate things and introduce AI into different customer segments and also different geographies as well. We have leaned into artificial intelligence. I think it's just very interesting for the type of people that like to work at a fintech in general. So everybody's been experimenting, let's say, privately with AI from the very early days. And we've made a bit of a distinction between how we use AI within the commercial world and within the technical world. So we use it for code work and for coding and for generally internal guidance. So that means that if the AI output is staying within Storefund, we can use it to review documents, to check for potential gaps in KYB submissions, the rest of the records that we submit and discuss with our risk team, for example. A lot of that is being assisted with AI to sort of point people in the right direction, but still with human review, as you might expect. The next stage where we've started to see some pretty positive outcomes here is just sort of finding data, really, and helping with the discovery of our products. So what I mean is that as we're growing, we need to look for insights a little bit harder, and it's no longer possible to eyeball data in the way we could in our very early days, right? We may have hundreds of new customers coming on board in a particular short time period, and we want to understand their behaviors, their click activity, the information that they're submitting to us, the questions they're asking, to make sure that we're providing the best user experience possible. So AI has kind of sat in and helped guide our learning there. And we've started to use it to develop content as well to attract customers at the individual level. So we basically have a sales or marketing person, or not a person, a presence 24/7 in all of the geographies that we're active, just to engage with people who might be interested in taking a look at our products. And those are fairly sort of low risk applications of AI. The bits where we're being very cautious is just around anything that touches the customer directly. So once somebody has applied for our service or is actively using our product, we think quite a lot about how those interactions should occur. And we're being quite careful to use AI slowly and carefully, as I said, in those cases. And I think the best way of describing that is that we find many companies are using AI to try and drive down the cost of customer acquisition, which is one way to improve your profit margins. But we tend to lever more the ability to drive customer experience, which extends the lifetime value of a customer. So I don't know if we've ever said it explicitly, but we're happy to incur a little bit extra expense in terms of the onboarding experience of a customer, because we know that they will stay on our product for longer than most of the others that they've tried before. And so trying to get that balance right is super critical. Understanding the personas that you have for your customers is super critical as well. And so we are developing ways to improve the user experience by automating things, by almost kind of guessing the answers to forms that are being used by the customer during the onboarding experience. But like I said, that piece has been the kind of slowest to develop by design.
Where would you, I know you mentioned you're more on the cautious side when it comes to customer facing, and I think that's the kind of theme that we've observed across different leaders, founders, businesses. I mean, I think the relationship and the human element is something that AI cannot yet replace. And it's a lot of times you're correct to say that it is where AI can assist in, with data or processes like KYB checks and making sure you haven't missed out or anything, or to improve things as well. Where do you think it's overhyped though? In your industry or generally from your own experience, apart from Storefund, have you come across in this day and age any AI being used not to its potential or not being deployed correctly? What do you see the main challenges that companies have faced in the past few months with the deployment of effective AI?
I think it's just difficult to say for various reasons. As you know, the AI world is evolving faster and faster, almost beyond an exponential curve now in terms of the model development and everything that's available out there. So I'm not sure the results are in for the last sort of cascade of models before we moved on to the new ones. And of course, I'm not sure many companies will admit when they've made mistakes there as well. So a lot of the evidence we have is really anecdotal, and not for Storefund, obviously, but from competitors and other companies more broadly that are out there. I think that the most sort of consistent feedback we hear is that people complain about just sort of not dealing with a person, right? A faceless sales process, even when it is with a human being, that the prompts and the discussion is very quickly getting into, trying to close a deal, or not really interested in the individual circumstance of that customer, but almost like a checklist in the approach that is being used to try and onboard that customer. So we do have that anecdotal, as I said, feedback from many customers that choose to use Storefund who've tried other products, and they just don't like not just the product fit, but also the way that they're being handled by those companies. So I certainly have heard that enough to believe that that is potentially a sort of overhyped or over reliant part of the use of AI in some of the other companies that we're coming up against. But like I said, it's very difficult to measure what the output of that is. Maybe it makes sense to experiment and fail and get better as well. So I don't mean to discount what other companies are doing, even if it might appear that it's not working in the short term. Maybe they're going to come sort of roaring back, and we should have been faster to lean into those things. So I definitely don't think anybody has the answer, and I'm being very sensitive to the fact that my opinion could change quite quickly, really.
You're an active seed and angel investor in decentralized infrastructure in companies like ZK Pass and Abbey Labs. Setting Storefund aside, where do you think blockchain now actually earns its place in financial services rather than being a solution looking for a problem?
Yeah, it's a really good question, and we didn't get into it, but part of my motivation for leaving large corporate banking world and going into fintechs and then eventually the startup route was really this desire to help sort of democratize access to capital. I think there's some way to go there, but without getting too political about it, I generally believe in the small government and people being given options, not being sort of regulated out of access to certain markets and things like that. So for me, sort of Bitcoin technology has been fascinating for the last decade and a half. It really is a sort of freedom tech. And I think it will become more and more sort of relevant in people's lives, especially as we're seeing the decline of fiat currency. So that's my sort of Bitcoin maxi pitch, which, it's not the best dinner conversation, even sort of 15 or so years on. I think the immediate sort of use case that's grabbed attention, and rightly so, is the use of stable coins. And so we're seeing, forward-looking payment companies, banks, and other large financial institutions leaning into stable coins. Obviously, we have Clarity Acts and other stuff happening over here in the US as well. Sadly, not happening quickly enough in Europe, but maybe no surprise there. But it's quite a global innovation that basically allows money to be transacted 24/7. It means that the cost of moving funds is very, very small. So there's new use cases emerging where small payments can occur. And critically, even though, of course, the vast majority of money is not actually printed and in people's pockets, I mean, it is 100% a digital product. And so I think the application of stablecoins has been super interesting. I think there's still some quite exciting use cases of decentralized finance that are cropping up in terms of being able to invest in certain assets, real world assets. Several of the big financial institutions now support tokenized instruments as well. So you can make up your portfolio, even if it's very small, into a vast range of different products and investing structures. So I'd say for me, sort of Bitcoin is the king still, and probably always will remain so. Stablecoins is the immediate application that I think has the real sort of potential to get everybody into this digital innovative age. And then everything else is very much, your opinion, what decentralized products and financial products especially are looking interesting and worth keeping track of. I struggle to keep up with everything, to be honest, and it's not something that we use within Storefund, just to be clear about that as well. So my sort of angel investing activity is really just my ability to contribute a little bit back to that space and to keep informed by the founders of those companies what's going on, so I can feel like I'm at least not completely sat outside of the action.
I mean, I think um, we have certain, waves and troughs of these technologies. It used to be blockchain a couple of years ago. Now everything is around um, AI and chips, and that's the new race to kind of get behind. And it feels like you don't even get like a solution or a good use case to the previous sort of technology that was being developed, and was we were pouring so much money and talent and resource into it, and now we moved on to chips and AI, and it's still at a place where maybe the solution is kind of ahead of the curve than whatever problems it could potentially be solving. Um, And I hope we actually find the right problem fit for this before we move on to the next hyped technology project.
I would say don't underestimate the number of smart people that are still working in blockchain technology. If you look at hash rate, number of active addresses, even sort of TVL, right, the volume that is being locked or used within these products, it's very quietly increasing at a rapid rate. Obviously, it's a tiny portion of the global economy or even sort of payments world, but in some spaces, it's already, very substantial. I was about to say too big to fail. That's a terrible analogy. And look, I think there are things that are exciting to invest in, and then the attention quickly moves elsewhere. And we're a little bit guilty of that in our investing activities. But many of the best sort of innovation is actually occurring during the quiet periods as well. So it's been quite refreshing at times to see these sort of bear markets in Bitcoin and other crypto assets, because that tends to be where the most serious people are showing up. So you can't really see who those are when there's hype and everything else is going on. But when the tide goes out, if you like, you sort of see who's swimming naked. That was a, a saying in the banking world, but I believe that's true as well. So I would say things are still going on and increasingly so in the blockchain space. Maybe AI is overhyped as well, but I can't see a world in which both don't play a fundamental role in the way that things are being done, especially in financial services. And so I still remain super excited by that. But yeah, I think it's realistic to say some of these things can happen really quickly, but maybe the outcome of all of this is that the vast majority of people are using this technology. They just don't even realize it yet. And as a product person, I grapple with that because I want people to nerd out and experiment with these things directly. But if they end up using it without even knowing it, I mean, that could be the best user experience of all.
That's true.
Now, conscious of time, David, I'm going to ask about Storfund securing a place on the Sunday Times 100 tech list. Now, where do you think Storefund's heading over the next year or two as you push deeper into embedded finance?
Yeah, it's a great question. So we, as I said, had our sort of fundamental base in the e-commerce space, and now we're looking at other verticals actively and staying within the e-commerce space as well. So I do think that there will be more partnerships coming, some to be announced soon in both e-commerce and in different verticals as well. And we do get asked about other products that may be offered by Storfund. I think I said earlier on that we don't really plan to go into that. Having said that, there are opportunities that may come up from sort of time to time where it does make sense to consider partnerships across different products as well. So it's possible that sort of opportunistic opportunities may appear in other domains as well. I really think that we have to see how things develop. Just like the AI space, what Storefund's activities are developing fairly rapidly as well. And my role is as much about sort of being ready to take advantage of opportunities which come up, which we may not be able to foresee, as being able to sort of sit down and write, out a 3 to 5 year plan. So in the next 12 months, I expect a lot more partnerships to come, very focused on embedded and bringing in new customers at scale, both within the e-commerce and other verticals. But, beyond that, it's quite hard to predict. So I think it's just a case of being ready and available to jump into those opportunities that are coming to us at an increasing rate.
Well, thank you so much, David. Thank you for walking through how this all actually works. It's not often you get this much detail on how the plumbing of e-commerce or embedded finance works. Uh, it's
Of
an
course.
honor to have you here, and thank you so much for the transparency and the genuine conversation. Made for a really, I hope anyone watching enjoyed it as well, and we got to learn a thing or two.
Very good. Yeah, it's my pleasure. Thanks a lot for inviting me.
Thank you, David.
Thank you.